But I want to get your thoughts on two stocks that you're seen as an authority on. Nvidia sold off big on its earnings.
Yes.
To me, the numbers look good. I get the concern around guidance.
Nvidia's strong industry partnerships continue to play a vital role in driving innovation and growth. The successful CES demo, powered by Nvidia hardware, highlights the company's collaborative approach in advancing AI technology. With further developments expected at the upcoming GTC conference, Nvidia's ecosystem of partners is well positioned to leverage new advancements and expand their capabilities in the evolving AI landscape.
Yes, we've reworked our models, and we have never said Nvidia is going to be a bad stock. What we have said is we think that the bigger AI plays, now that Nvidia, or let's say back 6 months ago when it was near its zenith, we were saying back then, there are companies out there people don't even understand are the most important AI plays and share gainers in the software space and in the embodied AI space, the physical space. Think Tesla, which is robots, energy storage, AI. So we were very much focused on who Nvidia was enabling. Now we're taking a closer look after this drop. What we are seeing is the hyperscalers themselves are all trying to build out their own chips. Nvidia still has the lion's share. Even in our model, we battle tested it, dropping it from 80% share in GPUs down to 40% in the next 5 years, and taking its margin structure back down into the 60s, the gross margins from the 70s. We still get a north of 20% compound annual rate of return now. But I think many investors are just asking that question, wait a minute, are they going to lose share? Whether it's to AMD or to their largest customers.
Not Intel.
No, not Intel. But Amazon has Graviton and Trainium. Google has the TPU. Microsoft, Meta, they are evolving their own chips. So this market won't be Nvidia's alone, but all praise to Nvidia for the incredible opportunities it has created. It really got the AI revolution going, and we think it's still going to play a mighty role. We do own it in many of our...
While Nvidia remains a dominant force in AI computing, the competitive landscape is evolving as major hyperscalers like Amazon, Google, Microsoft, and Meta continue developing their own custom chips. Despite expectations that Nvidia's GPU market share could drop from 80% to 40% over the next 5 years, its ability to sustain over 20% compound annual growth demonstrates the company's resilience. Nvidia's pivotal role in driving the AI revolution has solidified its position as a key player, and while competition is intensifying, Nvidia is still well positioned to maintain significant influence in the AI market.
Lastly, before we let you go, Tesla. I remember talking to you about Tesla 3 years ago out of my kitchen during the pandemic, so let me reconnect with you on Tesla. Now, sales have come under pressure. Overseas, namely. Some would say it's because Elon Musk has gotten close to the president. Are you still bullish on Tesla given what we have seen with Tesla sales this year?
Tesla's recent sales pressures, particularly overseas, have raised concerns, yet the company's long-term growth potential remains a key point of focus. While some speculate that Elon Musk's political associations may have influenced market sentiment, Tesla's strong positioning in EV innovation, energy storage, and autonomous driving technologies continues to support a bullish outlook for many investors. As the EV market evolves, Tesla's ability to adapt and maintain its leadership will be crucial in determining its future performance.
The economy, I think one of the biggest things going on is the global economy is extremely weak. And sure, there are these political considerations, but we're split right down the middle. For every hater, you have someone on the other side. So I have no idea about that. But the two things that are going to happen this year, so this is not 5 years out, mañana, this year, they're going to, in the first half of the year, release their low-cost vehicle. Could be $25,000. No one, except in China, and the Chinese companies are not being allowed in here, but no one in the EV market in the US is going to come close to that. We think that's going to drive demand. The Model Y refresh, I went to go exchange my Model Y, which is on hardware 3, to a new Model Y with hardware 4 for full self-driving perfection. And you know what I love about Tesla? I go to the showroom and he said, "Oh, no, you don't buy that now. We're putting out a whole new refresh line," which, by the way, I knew and I don't know what I was thinking, but this is what they're telling customers. That's the right thing to do. So first thing is that low-cost car. I think there's a lot of pent-up demand. The second thing is autonomous. They're launching in Austin in June.
The robo-taxi.
Robo-taxi. Yes, robo-taxi. In the vernacular. So yes, they're launching in June in Austin. They just announced yesterday they'd like to start a ride-hail service in California. The regulators are tougher there. So I now think they're going to start seeding every state. And their FSD, according to our calculations, their robo-taxis will be safer in the fourth quarter than human drivers are. Waymo is, that would be a critical intervention every 700,000 miles. We think they get there. And they're only at 10,000 now. That gives you an idea of how explosive AI is, right? Waymo's at 400,000. So we think they're going to have a cheaper car and a better autonomous robo-taxi experience.
Still sound bullish to me on Tesla.
Yes.
Cathie Wood, CEO of ARK Invest. Always nice to get some time. Good to see you in person for a change.
Yeah.
Gentlemen, welcome to you both. Mike Bailey.
Tesla's upcoming innovations are set to make a significant impact in 2024, with two major developments driving optimism. First, the launch of a low-cost EV, potentially priced around $25,000, is expected to create strong demand in the U.S. market, where few competitors can match that price point. Second, Tesla's plans to roll out its robo-taxi service in Austin this June highlight its aggressive push into autonomous driving, with Tesla aiming for its self-driving technology to surpass human driver safety by year-end. These advancements could solidify Tesla's leadership in both EV affordability and autonomous mobility, reinforcing a bullish outlook for the company.
First to you on this crazy market day, what can you tell us?
Yeah, it's pretty wild ride here. I think especially between the big move lower we saw yesterday, this morning, opening, it was pretty terrible. I do think investors are starting to take a deep breath and say, okay, wait a minute. Have we gone a little bit too far? Is there something else that could happen? Could Trump, realize, hey, wait a minute, maybe we've pushed things a little bit too much, come back and find a way of softening the blow a bit. So I do think investors are putting those pieces together, coming back, starting to buy a little bit. Your last segment touching on Nvidia, certainly that's a big driver of markets. We've seen a nice reversal. And I think you mentioned that the multiple on Nvidia is crossing where the broader market is. In some ways, I think that does suggest some value. So I think investors are starting to think through that, pick up the pieces, some of these things that have blown up with tariffs, and start to get involved. And we're seeing that as a nice recovery here intraday.
The recent volatility in the market has left investors questioning whether the sell-off may have been overdone. As concerns around tariffs and geopolitical uncertainty continue, some investors are now stepping back, reassessing the situation, and seeing potential buying opportunities. Nvidia's recent recovery, coupled with signs of value emerging in certain stocks, is helping to stabilize sentiment. This shift suggests that while short-term turbulence remains, some investors are cautiously re-entering the market, particularly in sectors like tech that have seen sharp declines.
Michael Farr, you think the same? So I think a lot of people, and I get asked this now, literally people are texting me and saying, what's going on with the market? Should I give them the Mike Bailey? Look, I'm not going to give anyone any advice. I'll just ask you guys. But there's the Mike Bailey response, which is maybe it's time to look at this as an opportunity. There's the response, though, that you hear from some of the others, including some heavy hitters in the market who say, this is not the time. The economy's slowing. There's going to be a lot more bumps in the road to come this year. Maybe buy bonds.
Market sentiment remains divided, with some investors seeing the recent volatility as a buying opportunity, while others remain cautious due to concerns about a slowing economy. While some analysts believe this pullback could present value in certain stocks, Others warn that ongoing economic uncertainty and potential turbulence ahead may favor safer investments like bonds. This split highlights the need for investors to carefully assess risk and focus on long-term strategies amid shifting market conditions.
I think you always have to look. So let's do both. Let's listen to Mike Bailey and say, yes, there are always opportunities out there. And maybe, as in your last segment, we should look at the other 493 stocks and maybe not the Magnificent Seven. But Wall Street's been doing a pretty good job, Kelly, of discerning the difference between the president's sort of bombastic approach to different topics that have indeed been effective and brought certain folks to the table, to the negotiating table successfully. Whether it's your style or not, it has worked some. But when that sort of bombast, and in this case tariffs, actually becomes policy, Wall Street has to recalculate. They have to step back and say, wait a minute, this might be a little bit too much risk. We've got a debt ceiling cap coming up in a couple of weeks here in Washington. Washington has gotten quieter, but still doesn't appear functional completely. So maybe take a little off the table, maybe take some profits. And I would also agree with Mike that maybe we overreacted this morning, maybe not. But Wall Street's trying to adjust to tariffs and perhaps a new source of inflation.
Investors are facing mixed signals as they weigh potential opportunities against rising risks. While some see the recent market dip as a chance to find value beyond the Magnificent Seven, others remain cautious amid concerns about tariffs, economic uncertainty, and political instability. Wall Street is now recalculating the potential impact of tariffs, which could introduce new inflationary pressures. As a result, some investors are choosing to take profits or adopt a more defensive stance while waiting for clearer economic signals.
Mike Bailey, how significant would it be if the president does announce a Ukraine minerals deal tonight?
Well, certainly, and anything that can help resolve some of the serious agita out there, among investors, that's a good thing. So again, there are plenty of conflicts out there, geopolitical, also just regular economic stresses out there. You start to take away some of those risk factors one by one. I do think that cools people's down, et cetera. We're seeing the VIX creeping up. That's an indicator of fear. We're kind of flashing yellow right now. We're not hitting red. I'd call a VIX above 30 red. So anything along those lines, whether it's policy, if it's Ukraine, et cetera, I do think that's going to help out reduce some of that. We get back to thinking about regular economic trends, earnings growth, et cetera. Probably a good thing, especially in the short term.
A potential Ukraine minerals deal could provide a positive boost for investor sentiment, particularly by easing some geopolitical concerns. While market uncertainty remains elevated, reflected in the rising VIX, conditions haven't yet reached panic levels. Removing key risk factors like geopolitical tensions may help stabilize markets and allow investors to refocus on core economic trends and earnings growth. In the short term, such developments could provide a welcome sense of relief amid ongoing volatility. Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide.